talk about some of the wealth creation strategies. Avinnash, the first stock on your radar, Ashok Leyland. Why is it that you're liking this one?
Actually, if you look at Ashok Leyland, I think the kind of visibility and the kind of performance which came out in the first quarter has been quite remarkable. Not only the volume growth has been very strong, the top line growth has also expanded quite appreciably, and more importantly, the company got the benefit of softer commodity prices, which we believe are going to be sustained over the next couple of quarters. More importantly, in the management commentary, the management has reiterated the fact that the CV sales are likely to be sustained. And more importantly, from the second half of FY16, we could see a stronger growth from the mining sector, which is going to further, reboost the growth from the CV sector volumes. Clearly, I think if you look at the kind of trajectory which the management has projected, they are looking at a 20% volume guideline, which anyway they have exceeded in the first quarter. And our sense is that probably you could see very strong earnings trajectory over FY16 and 17. We are looking at a EPS close to about 4.5 rupees for FY16 and roughly about 5.5 to close to 6 rupees in FY17. So I think clearly this is a stock which has got good visibility, and more importantly, it's currently consolidating. My sense is over the next 12 months, one could see a target price of roughly about 105.
What's the second recommendation then, Avinnash?
Yeah.
What's the second idea? Just
Yes Bank.
It's Yes Bank.
Yeah, I think within the private banking space, we have been liking Yes Bank for the simple reason that despite negative headwinds on some corporate governance issues, the bank reported a very strong kind of quarterly Q1 numbers. In fact, a good 28% growth in the profit, supported by a strong 40% growth on the NI. The bank has been investing significantly large amounts on its retail expansion, and the CASA growth has been quite commendable in the last couple of years. Our sense is that profit growth on a compounded basis could average about 20 to 22% over the next 2 years, and more importantly, asset quality, despite the negative headwinds, has been quite remarkable, below 1%. So we believe that Yes Bank could possibly throw up very strong earnings even for the next couple of quarters, and FY16 could continue to be a robust year. We are looking at an EPS of close to about 61, 62 rupees for FY16, and for FY17 an EPS of close to 77. So all said and done, despite the fact that the bank has clearly underperformed, this could be a good value pick for medium to long term investors over the next 12 months. We expect a target price of 910.
Avinnash, what is it that you're making of the rest of the market? After that pullback on Friday, we're seeing some choppiness creep in right now. What to your mind is the worry? Because things in China, as well as all the announcements from the government about PSU banks have come in. We know that GST is not happening. The parliament session as well is long gone. What's the sense that you're getting about what could be the big disappointment in the market right now?
No, I think clearly on the policy reform side, as I had earlier mentioned, on your program, that GST looks to be a non-starter. More importantly, clearly, the kind of progress the monsoon has made in the month of August has also not been encouraging. We have been hearing reports that the monsoon deficit is now to the extent of 10%. And I think the markets were clearly driven on Friday by the PSU bank news flows stating that the government would pump in a lot of capital in these PSU banks, which is definitely a good sign. But I think clearly expectations of a rate cut seem to be slightly overdone. And I think that was probably the reasons we saw even the private sector banks and the PSU banks moving up last week. So I think some amount of profit taking looks to be inevitable. And my sense is, unless we see some clear concrete action on GST or maybe on the policy side, from RBI, if these two factors don't materialize, I think you'll probably see some more profit booking coming in. My sense is 8400 is now a crucial level. If this level doesn't sustain, you could probably see some more selling coming in.
Okay, that's the take coming in on the market. But Avinnash, what is your sense of how long this PSU trade is going to last? I mean, we've heard from the government it's a 7-point plan that they have for the PSU banking pact. But could it really sort of lift off concerns with regards to asset quality out of the system? And do they now become a long-term buy?
I think, the kind of price movements we have seen in stocks like Bank of Baroda or maybe for that reason PNB or SBI, my sense is I think it's better to wait and then, invest in these banks, because clearly asset quality concerns have yet not evaporated, and clearly at least for the next couple of quarters, ground reality clearly state that the asset quality concerns for most of these PSU banks, if you compare them to private sector banks, definitely are not completely gone. So obviously the sentiment has changed. I think the market is pleased that some private sector people have now come in as clearly on the executive chairman committee side. So to that extent, there is a possibility that these banks could possibly get more independence in taking decisions on a day-to-day basis. Clearly, I think I would say that it's better to wait and watch, because clearly for the next 2 quarters, I would not be surprised if we continue to see these asset quality concerns continue to happen. Only after December quarter, maybe there could be some respite. So probably only if the banks correct, and probably by say 5-6%, I would be a buyer. I would not be a buyer currently for the same for the simple reason that asset quality concerns still continue to be quite large.
And what's the view when it comes to the kind of mild outperformance that we're seeing in the IT space owing to the currency?
I think the rupee weakening is definitely a positive sign. I think the Chinese devaluation has actually accelerated the moment. And more importantly, despite the fact that some part of the rupee depreciation would be passed on to customers, I think at least from the second half of this financial year, hopefully if the rupee stabilizes at around 65 odd levels, you could see some amount of margin enhancement coming for the larger IT companies like a Infosys, a HCL Tech, or a TCS. So to that extent, I think clearly IT companies at every decline could be a good opportunity. I think in this kind of volatile market, it's pays to bake with slightly more stable kind of sectors, and IT remains one of them.
Okay, Avinnash, good chatting with you. Thank you for taking the time out and speaking with us today. We're going to wrap it up then on this edition of Riding the Bull.
And of course, if you have any queries, please do write into us on rtb@etnow.tv or visit our Facebook page, facebook.com/etnow.